Ever wanted to be the bank? With bonds you can. Bonds are a unique way to invest your money and see it grow over time. Imagine loaning money to a friend. They promise to pay you back plus a little extra for your trouble. This is the essence of how bonds work. That's basically what a bond is. It's a loan you give to an entity and in return they pay you interest. You lend money to a government or company and they promise to pay you back with interest. Bonds are like IOUs but with a formal agreement. When you buy a bond, you're buying an IOU from the issuer. This issuer could be a government, a corporation, or even a municipality. They promise to pay you back the full amount you lent them on a specific date. This date is known as the maturity date. This is called the maturity date. Until then, you receive regular interest payments. Bonds are a great way to grow your money safely and steadily. They offer a predictable return on your investment. They're less risky than stocks, making them a safer choice for conservative investors. Plus, they provide a steady stream of income with regular interest payments. This can be especially beneficial for retirees or those seeking stable income. So, if you're looking for a reliable investment that can help you reach your financial goals, bonds are a great option. They offer security and predictability. They're like the responsible friend in the investment world, always there to pay you back. Consider adding bonds to your portfolio today. Let's break down how bonds work. Remember our friend analogy? You lend them $100 and they promise to pay you back $5 every year for 10 years. At the end of 10 years, they give you back your original $100. In bond terms, that $100 is called the principal, the $5 annual payment is the coupon, and the 10 years is the maturity date. See, not so complicated. The coupon rate is the interest rate you earn on your bond. A higher coupon rate means more money for you. The maturity date is when you get your principal back. Bonds are bought and sold on the bond market. Just like you can buy and sell stocks, you can do the same with bonds. Sometimes, you can even buy a bond for less than its face value, which is a great way to get a deal. Just like there are different types of friends, there are different types of bonds. Each type has its own personality and risk level, much like the friends we have in our lives. First up, we have government bonds. They're like the reliable friend who always pays their debts on time, never missing a beat. They're considered the safest type of bond because they're backed by the government. This makes them a go-to choice for conservative investors. Next are corporate bonds. These are issued by companies looking to raise capital for various projects or expansions. They offer the potential for higher returns but also come with more risk. It's a bit like investing in a friend's ambitious startup. It's like lending money to a friend who's starting a new business. The rewards can be great, but there's always a chance things might not go as planned. Then we have municipal bonds, issued by cities and states. These bonds are often used to fund public projects like schools, highways, and parks. They're often used to fund public projects that benefit the community. Investing in these bonds can feel like contributing to the greater good. They can offer tax advantages, which is a nice bonus. This makes them particularly attractive to investors in higher tax brackets. And lastly, we have bond funds. These are collections of various bonds pooled together. These are like baskets of bonds offering a mix of different types. They offer instant diversification because they invest in a variety of different bonds. This helps spread out the risk. It's like having a group of friends chip in for a loan less risky for everyone. By pooling resources, the impact of any single bond's performance is minimized. Ready to buy your first bond? It's easier than you think. You can buy bonds through a broker, just like you would with stocks. Many online platforms make buying and selling bonds simple. Look for platforms with low fees and a user-friendly interface. Another option is to invest in bond funds. Bond funds are a great way to diversify your portfolio and reduce risk. You can buy bond funds through most brokerage accounts. Before you buy any bond, do your homework. Research the issuer, check their credit rating, and understand the risks involved. Don't be afraid to ask for help from a financial advisor. They can help you choose the right bonds for your portfolio. Like any investment, bonds come with risks. It's important to understand these risks before diving in. The biggest risk is interest rate risk, which can significantly impact your investment. When interest rates rise, bond prices fall. This inverse relationship can catch many investors off guard. It's like buying a used car. If interest rates go up, the value of your car goes down. Another risk to be aware of is inflation. Inflation can eat away at your returns, reducing the purchasing power of your money over time. Imagine lending your friend $100 and they pay you back $105 a year later. Sounds good, right? but there's more to consider. But what if inflation is 6%? Suddenly that extra $5 doesn't seem so great. Your real return is actually negative. This is a crucial point many overlook. Credit risk is another factor to consider. The financial health of the bond issuer is paramount. If the bond issuer defaults on their payments, you could lose money. This is a risk that can't be ignored. It's like lending money to that friend who never pays back. Always assess the issuer's creditworthiness. Despite these risks, bonds are still a valuable part of any diversified portfolio. They can balance out more volatile investments. They offer stability, income, and a hedge against inflation. These benefits make them an essential component of a well-rounded investment strategy. Just remember to do your research, understand the risks, and invest wisely. Happy bond investing. With the right approach, bonds can be a powerful tool in your financial arsenal.